we will bring up those charts for you. But Gaurang Shah, Senior Vice President, Geojit Financial Services, joins us this morning. Good morning, Mr. Shah. Thank you so much for your time once again. Just want to understand from you this bounce back that we are seeing in IT stocks. Is this just value buying, or do you think there is some sort of a pivot when it comes to India's IT story?
Thank you, Kartik, for having me on the show. Good morning to you and to all your viewers. A small disclosure, all recommendations that I'll be sharing with you this morning on your show, Kartik, are a part of our fundamental research team recommendations from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share advice with our clients on similar lines. They might have their investment interest. So I think, first of all, the valuation-wise attractiveness is definitely there in the IT space, given the correction post the Anthropic AI tool. And then, of course, flight to safety sectors because of rising crude oil prices. IT is one of the service sector which is relatively less affected and does not have any kind of close connectivity with rising crude oil prices. Maybe it is some kind of value buying, or maybe it is flight to safety kind of a trade that is taking place. But on the fundamental side, Kartik, we remain positive on IT with 1.5 2 year kind of perspective, small cap, mid cap, and large cap. Across, we have recommendations.
So those are the recommendations. The IT mid-cap and small-cap seem to be the recommendations coming in. We will pull up those charts also. Meanwhile, I want to throw some numbers for the sake of better clarity for our viewers, because we were up until now, Mr. Shah, looking at, at indices and the kind of wealth erosion from the time the war started on the 28th of February. But I've just taken the liberty to go back this entire calendar year, and starting 1st Jan, Nifty 50 is down about almost 10% or so. Let's pull up those graphics on the screen for the sake of our viewers to get more clarity. Nifty 50 is down about 10% or so in trade this calendar year 2026. We've also seen Nifty oil and gas perform better despite the tension in West Asia, down just about 9%. I'm saying just with a lot of caution, because Nifty auto is down about 12% or so. Nifty bank is down about 8%. But Nifty IT, and even though we are seeing a bounce back in IT stocks perhaps on value buying this morning, Nifty IT has eroded almost a quarter of investor wealth in this calendar year alone. Meanwhile, the small cap and the mid cap section also continues to be battered. The Nifty small cap 250 is down almost 11%. The Nifty mid cap is down more than 9%. Overall, this entire calendar year has pretty much been a bloodbath for investors, but the war is just a little over 2 weeks old. So overall, I'm saying if the war were to continue for a little while longer, or even if they were to come to an end, the fighting was to sort of come to an end sometime soon, as US President Donald Trump is claiming, the overall investor sentiment seems to be fairly negative this entire year, Mr. Shah.
Last year also was quite bad, Kartik. We had a higher single-digit return entire calendar year 2025, and I think it was since the beginning of the tariff-related fears and the constant shifting of goal by the US president. Not only last year, but even on this geopolitical situation, if you actually go to see, there's been a constant shifting of goal by the US president. Started with regime change, and then it has completely gone haywire. Overall correction, the market is close to about 12%. Correct me if I'm wrong. Sector specific, some are less, some are more. And my sense, Kartik, is that, given the situation that we are into and the close dependency of India's on imports of energy requirement, crude oil and natural gas, this has a direct impact on the GDP also, as we all know, Kartik. So, this could stay on for some time, till the time we have some kind of resolution, de-escalation, diplomatic talk getting initiated in the Middle East. And this time it is a little bit different, Kartik, because of Iran and Strait of Hormuz. And that's our dependency, right? That's our large portion of our lifeline for our energy requirement. So in that kind of a scenario, you will have markets underperforming or having corrected. But looking beyond next 3 to 6 months, I think these are great times to get invested in strong names from a long-term point.
All right, so strong names from a long-term point of view. Meanwhile, you were talking about the rising crude prices, and there we had them on the screen. In fact, Brent crude is up year to date about 70% or so. So this is obviously something which will have lasting effects on the secondary as well as the third grade of impact. So this is something that obviously is going to be a story which is unlikely to fade off anytime soon. But Mr. Shah, I also want to understand, what does this sort of volatile environment really mean for IPOs which were scheduled to hit the Indian capital markets this year. PhonePe, of course, has said that it has deferred its $1.3 billion IPO. Meanwhile, Zepto is still apparently targeting that $7 to $8 billion valuation. Oyo is also targeting a similar valuation. Flipkart has pretty much flipped back to India to unlock a massive $35 to $40 billion valuation. Razorpay has initiated discussion. So all these, and of course the big one, NSE. So all these were IPOs, big ticket, sort of top headline grabbing IPOs which were scheduled to hit India this year. But given all the volatility that we are seeing in the market and some early statements coming in, how do you see the IPO market shaping up this year?
I think relatively it would be deferred.
Okay.
And my sense, and again, we all heard Kartik, Honorable Chair of SEBI, cautioning investors with the kind of approach that investors were going into the IPO. And last year and the year before, some of the IPOs which are right now, if you actually look at them, they are trading below the IPO price, most of them. So my word of caution to all your viewers that if you're looking at investment in IPO, there are a lot of ways to figure out whether the paper is credible or not and whether the valuation are reasonable or not. Don't approach all IPOs with the same mentality and perspective listing gains. You may end up falling flat. So, and my sense, Kartik, for this year to answer your question is that good paper, decent valuation, and attractiveness in terms of future earnings will definitely get subscribed.
Okay.
Some names which are rich valuation and not so very certain future outlook will tend to fail or pop out.
All right. And what about retail investors, Mr. Shah, who have their capital stuck in markets which are underperforming? Will they be in a position to exit their positions, sit on some cash and wait for an IPO to park their money in?
So I think, well, honestly, Kartik, I will be a little bit more satisfied if the space or the run rate of IPO slows down a little bit in this kind of a market.
Okay.
Because this is going to put pressure on both secondary and primary market.
Right.
And then you will have a lot of noise around it. So I'm glad that the run rate is slowing down, the space is slowing down on the IPO, and good papers will get merit. Not so good papers or a rich valuation will not get that kind of merit or subscription. Whether there will be liquidation from the secondary market to go into primary market, history tells me that it used to be a case many years back. But of the recent years that I've seen, there is enough liquidity in the system, and I don't think there's going to be any kind of pressure on the secondary market if there is a primary market quality paper coming in. There is enough liquidity, Kartik.
Liquidity. All right. Well, unfortunately, that's all we have time for. But as always, pleasure having you with us, Mr. Shah. Thank you so much for your time and for joining us here on News 9.